Okay, so for those that have requested my layout for my charts, what I'm looking for, I'm going to talk you through the indicators. What I'm looking for is a market that is essentially overbought or oversold, and that's either on the day or over the course of a week. And then a combination of over the course of weeks, a week, days, the day, sessions can offer very powerful directional biases. So what I mean by that is if we've got a build-up of longs, let's say um, this is 1 week of longs, or 1 week of longs, and another week of longs, and then another week of longs. At some point, this has to sell off, and if I can combine that, so week one, week two, week three, and then if I can combine that, which would start to level off, with a week, let's say 1 week, that has given us, um, say, at the start of the week, so Monday, Tuesday, and Wednesday, when it starts to level out on Wednesday and breaks structure to the downside, then I'm looking for the market to essentially sell off. And the more volume that has been dragged up, the more likely we're going to get the sell off. And not only that, a really nice move, an extended sell off, right? Now, if you removed those 3 weeks and say it was only 2 weeks of volume that was built up, right? So week one, week two, and we got this scenario on Monday, Tuesday, Wednesday. We might get that sell off. The likelihood is we'll get that sell off on Wednesday after 3 days of build up, but it may be not as deep as a sell off as if it were 3 weeks of built up length. So I hope that makes sense. And then not only that, we can combine it with, say, on the third day. So on the third day up here, so Monday, Tuesday, Wednesday, or it could be Friday, Monday, and Tuesday, just a 3 day cycle. So it could be Wednesday, Thursday, Friday, it could be Tuesday, Wednesday, Thursday. Whatever day of the week it is, whatever day of the week it is, on the third day of build up, if you can combine that also on a particular day, so let's just stick with Wednesday. Let's say it was Wednesday and you had Asia, London, right? And then New York making fresh highs for the day. You've got a scenario where you've got a build up over the course of the weeks, a build up over the course of um, the week, so Monday, Tuesday, Wednesday. So let's say let's say we're talking about July. So the first week of July, the second week of July, maybe even the third week of July, and then you've got Monday, Tuesday, Wednesday, and then on the day itself on Wednesday, you've got Asia, London, and New York. You've then got a sort of a triple whammy scenario, right? All in here with a lot of build up. Okay, so at that point, you'd be looking for an even stronger sell off. All right, so that could typically happen at the end of the month or the end of a 3 month cycle, whatever it might be. But the more threes you have together, the more likely your thesis is going to be correct for a sell off. And the same would be for um, the reverse, buying the market into shorts. So that's what I use this weekly template for. Okay, so I hope that um, gives us an idea of what it's about. Now, let's break this down then. So if we come down to an hourly chart to make it easier to read, and we'll go through these one by one. So I'm turning these off. We'll just start with a simple directional bias indicator. Now, within this indicator, so you can find that on double zigzags. If you go to indicators, double zigzag by lonesome. Okay. You come into these settings, and this is essentially going to help you pinpoint the most relevant highs and lows and the market structure. So if I'm looking for um, confirmation that the market is um, breaking down, so so this is a good example. So we've got the euro dollar over the course of however long that is, it's come up, and this is what I'm looking for. I'm looking for the build up of longs, and then I want to determine at what point is the market breaking structure. So I would look for the um, the the lowest high, or the highest low before the highest point of that area of consolidation. So as you can see, move that away, we've got a market here that came up, okay, from all the way down here, and it started to move sideways. Right, we've talked about this, I believe, in the educational videos. And what I'm looking for is an opportunity to sell, and I want to sell into all of that length. So at what point am I going to consider the market broken down? Well, I'm going to consider the market broken down at this point here. This point here is the highest low before the highest high. Okay? So, I mean, you could argue that it was over here, but was it? Let's have a look. So, put our line on that, somewhere in there, and over here. So, move that indicator. So, what was the lowest point of this consolidation? Well, it was over here. So, for me, that is the area, that is the level that I want to see broken to confirm a bearish bias. Okay, and that was the highest low before, that was a swing low before the highest high. Okay, so the range of this consolidation is that. That is the range of the consolidation, and that is what I need to see broken down. Okay, so this candle here broke that. All of this down here is breaking that volume, that channel, that consolidation. We've had a move back up into it, which is very typical. You're not just going to break it and come all the way down. You very often see it move up. And then at this point, I'm looking for confirmations that this market is broken down. Okay, so the confirmation for me was this M formation up here. This is what I'm looking for on all time frames. So we had that M formation, we had the move back up into the displacement from up here, as we've talked about in the videos, and then we've had an engulfment of that correction, and then we've got a pin bar, so an indecisive candle. There are no buyers really coming in at this point, and then you've got that engulfment, which that candle there, that very strong momentum candle, it didn't engulf all of that, but it's whatever you want to call it. It's the momentum candle, really. And engulfment would be engulfing all of that. So that momentum candle that has basically sealed the deal. This is a market that is breaking down out of consolidation, and you'd be a seller on that candle. Okay, you seller on the close. You could be seller up here. You could have your sell limit. In this case, you wouldn't have got triggered at that point or at any point. So this is a market that is fiercely breaking down. In some instances, you'll see a push back up. So you'll have the breakout, right? So you let that break, and you see a move back up before the next attempt lower. But in this instance, it just broke down. Okay, so that's what I'm using this indicator for. It just, I mean, you can eye it yourself, but at times these lows are so close together, and especially on the lower time frames, the market can be pretty choppy, and I like to just be able to quickly identify what was the lowest low and what was the lowest or the highest high or what have you. Okay, so that's indicator explained. Then I use Sonar Lab Imbalance Finder, and more often than not, when you see a displacement, right? So you've got a move out of high volume areas, it will leave behind gaps, imbalances in the market, for which you can see the price often move back into. So in this instance here, um, so when the market dropped like this, it left an imbalance between here and here, and on the next candle, you saw that the market tried to come back in. It used it as resistance. But if you had your sell order here, so if you didn't want to be selling down there, you could say to yourself, well, I'm of the mind that the market's going to move back in to either fill that imbalance or at least test it as resistance, and you'll get a better fill. So, for instance, you get a better bang for your buck than if you try to enter the market, on that candle. So you're getting a much better deal. So I use that indicator for that purpose, and also so not only as an entry point, but to avoid FOMO. Instead of trying to chase a move, a displacement, I'll take a step back and say, well, hold on a minute. Does this have an area of imbalance that it might need to come back up and fill? So a very similar scenario. And at that stage, I might say, well, look, I think it's going to fill that gap and move up into this order block or this area of resistance. In this case, it didn't, but in other cases, it might, and get a better fill. And if you use dollar cost averaging, you can have a fill up here, sell limit there, or you could say, well, I think it might only come up to here, or it might go up to there. If it comes up to here, then great, and it rolls over, then I'm in. If it comes up into here and then into here, then I just get a better average price somewhere in the middle. Okay, so that's what I use that for. Then on inside bars, um, I use the inside bar indicator. So over here you've got inside bars. You can toggle this to show an inside day. So what I'm using this indicator for is for inside days, and those inside days, they tend to lead to a breakout. So it's for the purpose of a strategy. They tend to lead to a breakout one way or the other, and you can catch parabolic moves by knowing where the inside day is, especially if it's, say, at the start of the week. Monday and Tuesday typically could be an inside day of Friday, and then we're looking for either a parabolic break to the upside maybe on Tuesday or Wednesday, or to the downside. So that's what I use those for, and we'll go through those at a later stage, the inside day breakout strategy. Um, Yesterday's open, high, close. Um, so I believe, let me see. Yeah, so there it is by Eduardo Mate. Yesterday's open, high, low, close. Um, I've got those settings as to resolution 1 day. You can just take a look at that and screenshot it, and you'll basically um, you'll get a line where the prior day closed. So in this instance, we're in replay mode. So there is the line. So for me, we're bearish while below yesterday's close. So I like to see where yesterday's close was visually, easily, so I don't have to be looking, where did yesterday close? So I like to see that. So here we've got a combination of an inside day, a breakout of the inside day, a retest of yesterday's close, and a subsequent break of structure, right? So what's that telling me? That's telling me to sell. That's giving me a bearish bias for the day ahead. So a potential parabolic day to the downside, which we haven't actually had, but we've had some nice movement nonetheless to the downside. Okay. Um, right, these daily close markers by terminal 10. These give me a bias. So um, if we've got a series of red closes, so these will close, these will show whether, so on Tuesday the 25th, that was a lower close, and then on Wednesday the 26th, we had a higher close. Now, had this been a higher close, but had the market closed lower down, then the following day, my bias would be to be buying, right? Um, well, in fact, I mean, this worked out as it was. So we had lower closes and we had a bullish close. So my bias for this day on Wednesday would have been to be buying, right? And I wouldn't be buying high up at the top of the range, okay, in the US. So for me, this wouldn't have worked out. But if I was in Asia, it would have, and if I was in London, it would have. I was buying at the lows, yeah. So in London, buying at the lows. In Asia, buying at the lows for your scalp to the upside, in tune with the flow of the market from the previous day's close. Okay, so that's what I use those daily markers for. For instance, yesterday we had a first red day. It was a higher close and then a lower close. So the lower close gave me a bias to be selling. But I'd rather see a build-up of closes, opposing closes. So this wasn't a particularly great setup because we've only had sort of 1 day of red and then an up day, so and then another down day. Um, but had that been a series of up days and then a down day in an upward market, then that would be a much better scenario. So this video is about to come to an end, and there'll be part 2 as we move into volume profile and the days of the week and day count.